Welcome to the trade on this Thursday. Before we get into the charts, let's take a look at what traders are watching. The Israeli military has said its forces resume ground operations in central and southern Gaza as the second day of airstrikes killed at least 48 Palestinians. President Trump and Ukrainian President Zelensky have agreed to work together to end Russia's war with Ukraine in what the White House described as a fantastic one-hour phone call. Trump has hosted top oil executives at the White House as he charted plans to boost domestic energy production in the midst of falling crude prices and the looming trade war. And Hino Motors, a subsidiary of Japanese automaker Toyota, has pleaded guilty over a multi-year emissions fraud scheme in the US and must pay $1.6 billion in penalties. Well, let's get across what we're seeing in currencies, and to do that, we're joined by Nick Twidale from ATFX. Nick, welcome back.
Thank you.
All right, let's start with the Aussie because we've just had the latest jobs numbers for Australia. Very much an undershoot there.
Yeah, hugely undershoot. I think Aussie's dropped off sort of like 20 or 30 points already. So could prompt the RBA to start another cut sooner rather than later, I think. And there you go, there's the move back down. It's not actually gone too far, probably only about 20 points. But that moves the Aussie back into the range, comes off of sort of resistance levels that were coming in just north of where we were sitting a few days ago.
What factors are at play, the fundamentals that are actually driving the Aussie at the moment? Is it more of a function of what we're seeing with the US?
I think so, yeah. The US is still dominating what we're seeing with moves in the Aussie, and it is for most of the majors as we've seen before. So, but Aussie's probably not rallied anywhere near as strongly as a lot of the other majors, particularly Euro, and it's actually weakened on the crosses. But as you can see, we kind of topped out just underneath that 64 cent level a few times. We got pretty much what we expected from the Fed last night. And I think, we're going to hear from more central banks today as well, but we really are tossing up between this risk-off environment, which always puts pressure on the Aussie, and whether we're going to see the dollar move lower due to the lower data we've got out the US as well. So it's an interesting dynamic we've got, and Aussie's kind of stuck between a rock and a hard place at the moment, which I think is why we're seeing these range-bound conditions.
Now let's take a look more broadly, and certainly in times of heightened volatility, investors tend to favour those safe haven currencies such as the Swiss franc and the yen.
Yep.
Let's start with the Swiss. What do you see?
Well, we've got the Swiss National Bank tonight, so we've
Yep.
sort of put a bit of that. It's come in very nicely, the Swiss, and is actually trading mid-range at the moment. So we've got the ability with the Swiss National Bank tonight. They're expected to cut 25 basis points. They're coming down to close to zero again, and they've been leading the way out of the major central banks. The nice thing about this chart is if we do get a surprise, and I'm not by any means expecting one, we've got distance for move on both sides. So, we're going to see it probably top out around about that 0.9 level, and that support comes in very strongly now to about 84. So, expecting a bit of volatility in the Swiss tonight. To me, really, it is that safe haven play that we're probably going to be looking for in the future, in the next few weeks. We're going to be keeping an eye on what our good friend Mr. Trump, who just had his fantastic phone call, how he goes. The more he starts to push on tariffs, I think we're going to see haven flows into the Swiss. So we may see that move down to that 84 level. If we do see some certainty in the market, then I think we could see dollar Swiss rally back up towards that 0.9 level. But it really, unfortunately at the moment, we really are coming down to geopolitics rather than the fundamentals.
Now, it is central bank week with decisions left, right and centre. We heard from the Bank of Japan yesterday, did leave rates on hold, but of course clearly it does have a hiking bias.
Yeah, they're still in their hiking bias. They're very concerned about wage pressures. They're very concerned about inflation in general. They have the same issue that every central bank has got, is we've got this uncertainty in the market. They have to acknowledge it, and that's why I think they remained on hold. We did see a good move in the market, but that was more post-Fed rather than post-BOJ. We've come down nicely into that range off of that 150 level. The levels are now established, I think, for dollar yen for the next. It's very difficult to say with dollar yen because we get 400 points in a few days, don't we? But I think most people are going to be looking in the current environment to be selling rallies back up to that 150 level and to explore that 145 level down on the bottom side. But that's probably more a dollar story. What we really want, we're probably going to be looking at yen crosses with regard to what the Bank of Japan did yesterday. But I think in general, longer term, we will see yen buying coming in across the board. Probably Aussie yen and maybe euro yen if we see a change in that euro dynamic that's taken it so high so quickly in the last few weeks.
All right, well, let's go there, take a look at the euro. And of course, we're seeing some significant fiscal changes in Europe, certainly in Germany.
We are 500 billion euros worth of it from that German government. And that's the main reason why we've taken us up to this level. But it's quite nice. This is a longer term chart as well. It's quite nice. Euro is sitting just beneath that long term resistance, and that is a strong resistance level. So I think in the next few weeks, and a lot of it will come down to that geopolitics, that we will see big moves in the currencies. And whether we do see that extension and the dollar comes off and trades into a new range and euro pushes up through to that 115 level, or whether we come back down into the low ones, I think we're going to find out in the next few weeks. But it will come from certainty from what we're going to get from the US and how long that fiscal stimulus is going to last for us.
And finally, let's take a look at the British pound, and this comes ahead of the Bank of England decision tonight.
It does. It's going to be a busy night for sterling traders because they've got employment data initially on the London Open, and then the Bank of England coming. No change expected from the bank again, but once again, a similar situation to most central banks is they're looking at what's going on in the overall market, and there's that uncertainty coming through. I think it's going to be interesting to see what we get from Andrew Bailey from the statement and then in his consequent press conference. Once again, cable's trading near these highs, and the acceleration that we've seen is dimming for the pound. 130, obviously a key psych level as well. I think we're going to see plenty of volatility in sterling, pretty much on what we get from Andrew Bailey.
Nick, great to get across what we're seeing in currencies. Thanks for joining us on ATFX.
Thank you.
After the break, we're going to catch up with Paul Brennan from Suncorp to unpack that latest read on jobs.